Babe, can you text my parents? Thank you. Someone's in here. How you doing? Like and retweet if you can. If not, that's cool too. Appreciate the follow. What's going on? Hi Phil. What's up, April? Retweet it if you can. Let people know it's going. And we'll get started right away. Got about 7 people in here. Hey, what's going on? How we doing? For those of you who are in here right now, Nachi and I are planning on starting a Rumble. I don't know how that's going to go. We'll see how that plays out or what the format's going to be. It might just be 2 people talking about stocks and business. And, mostly AMC, obviously, and then touching off on some other topics and just having a conversation about, certain things and bringing people from the community in to talk about stuff. So, going over some charts and going over some videos and trailers and doing some reviews and stuff like that and having some fun with video. We don't know how the format's going to play out or whether we're even qualified or technically capable of making videos that are of that quality, but we're going to try. And we're going to try and move into that. We're going to talk about the fundamentals of the company again today, right? The most important thing is the fundamentals of the company. So if you guys are watching, you guys know that we are, passing $500 million at the domestic box office for the first, 15 days of, July. And that puts us on pace to make $1 billion in a month. And usually you have to say, well, I mean, you can make $1 billion in a month, but you have to have some guarantee that you're going to have a specific amount of money coming in, right? And we do know that we're going to have a solid amount of money for the weekend of Deadpool and Wolverine. There's already, I believe, $175 million worth of tickets booked at the domestic box office. So you have $175 million weekend just off of one movie. Again, you're going to have Twisters in theaters. The previous weekend, I think that's going to do well. I don't think it's going to do Deadpool numbers. I don't think it's going to do Inside Out numbers or anything like that. But it's going to be a good movie. It's going to have great action. It's going to have good sound effects. It's going to be great to see in the Dolby and IMAX. But that's ultimately going to just be one of those big weekends where you get a nice pop at the domestic box office, and then you move into your blockbuster for the summer, which is Deadpool and Wolverine. The coolest thing that's going right now is we have all this momentum on our side, especially on the chart, right? Now, they try to use Roaring Kitty to justify this bounce up and all these contracts with the call options as, oh, this is call options moving the price up, and this is Roaring Kitty, he's manipulating the stock. But the reality is that, you have this 200, that doesn't look good. Maybe need a different color, something. You have this, let's just do it in red maybe red works. Okay, you have this 200 day moving average, right? This is your 200, okay? And this is your stock, right? It gets close to the, oh goodness. This one maybe? This one? There we go. This is your stock, right? And every time it gets close to crossing this 200-day moving average, every time it gets close to crossing this 200-day moving average, it does something like this, right? So this is where you're at, right? This is your stock. Okay, this is your stock. And that's your 200-day moving average. And now, we've passed through this a couple times and they'll spike it back down, but this is why things are really getting ready to run, okay? Your 20-day moving average, which is kind of like insignificant at this moment, but it's like, it's literally just right underneath. That's your last 20 days. And then your 50-day moving average, you know, looks something like this. It's like that, okay? Now, this is technical analysis on a fucking whiteboard, so bear with me. The blue line is your 50, the green line is your 20, this is your 200. These things are acting as support pushing up. This is acting as a barrier. Now, we bumped off of this 200-day moving average twice, and we did that once last week, and we've done it once today. The 200-day moving average is at $4.55. We hit, I think, $2.54. I don't even know what the number is at right now. Hey, Heather, what's the stock at right now? 542. So again, we're getting rejected off of this 200-day moving average, and that's what I'm saying. Things are going to move quick, right? Because the last time that GameStop broke through the 200, it spiked up, and it's an inevitability that you're going to break through the 200, and people are going to see that. Breaks on the 200-day moving average are super positive, okay? And that means things are going to move quickly. Now, it could reject super hard, but it's got no place to go, because let's all remind ourselves that this is zero, and this is like $60 up here. There's only so little space this has to go down anymore. And if it rejects off of that 200, you're giving us the deal of a lifetime. Yes, they extend the play out longer, but they also increase the damage that they do to themselves, because now people are going to start buying insane amounts of shares at $1, $2, $3, $4 if they bring it back down, because the domestic box office numbers for quarter two are going to be reported, and we're going to have a positive quarter, and we're going to make a small profit, right? Which is okay. We're going to make a small profit, but we don't have to dilute any shares to pay our bills, to keep our cash position strong. We don't have to do any of that. And we had a great quarter with the Dune popcorn bucket, you know, increasing sales. Who knows? Maybe it made another, maybe we made another $10 or $15 million in merchandise. Not just from that bucket, but from other buckets and other merchandising that we were selling at the store. So merchandising is picking up. We're doing better at the box office, and we're doing better as a business because of our merchandising. And by the way, the Despicable Me popcorn bucket is the second highest selling popcorn bucket of all time, only second to Taylor Swift's popcorn bucket. So we raked in the dough on the Despicable Me popcorn buckets. They were all sold out. I did not get into the Thursday showing for the premiere. We went to, I think, the Saturday or Sunday morning matinee, and we tried to buy the popcorn bucket, and they were like, dude, these sold out almost immediately. There was no way you were getting your hands on one. We did get the little popcorn bucket, wherever it is, right? We got this guy, but we did not get the giant popcorn bucket with the laser eye, dude, you know, the mega minion. But that's okay. You know, that means that our customers are picking up tons of freaking merchandise and killing it for us, and that's extremely awesome for a shareholder to know that I don't have to go and pick out the popcorn buckets and help boost that revenue stream. The customers are taking it over for us. So super positive news when we start selling out popcorn buckets in the first weekend, okay? So all that is a catalyst, right? The popcorn buckets, the revenue, all that stuff. Quarter two is going to be positive. We're going to have cash on the books. We might make a penny or two a share. Who knows in earnings in the second quarter. But we know that we're booking profits in quarter three, and they can't really push this down when you're going to have a massively profitable quarter, followed by an insane movie lineup in quarter four, with a bolstered end of quarter three. Like, you got Transformers at the end of quarter three, you've got Beetlejuice at the end of quarter three. You've got a couple of them that are just going to move into early October, and they're not going to do crazy numbers, right? People are like, it's going to do 20, 30 million a day in the week. It's like, dude, those that at the end of September, movies fall off and get cut in half. Okay, so don't expect $20 million days or $30 million a day weekends for movies, because kids are back in school, families are back from vacation, and it's all business in September and October. You see a big move down, but the great news is that the movies start to pick up in October. We have a great selection in October. Obviously, November is amazing with Wicked and Gladiator and a couple other movies. Moana, I believe, comes out like right after Gladiator and Wicked. So you have like 3 movies. I think Gladiator could do 500 million, 400 million. I think Wicked will be the $1 billion movie for the box office in the winter or the holiday season. And obviously Moana has a chance to do, I don't know, 750, maybe $1 billion. It depends on how the audience perceives it, right? It's all about momentum going into the holiday season. And if it has momentum going into the holiday season, remember, it does run into Mufasa, which is the other Disney movie coming out a month later. So there's tons of movies coming out for Q4 and Q3, and they can't keep this thing down. So if you're looking at $5 a share and you're hesitant on pulling the trigger, I understand, because you don't know where this could go. It could go to 3, it could go to 2. But my money is on this thing making a move upward because of all the catalysts. One, the stock price is suppressed. The volume is suppressed. The spread is criminal. We're trading in between pennies. If you look at the bid-ask spread, there's not really a spread on the stock. They trade 8 million shares within a penny spread, and they move it up like, a quarter of a penny every trade or something like that, and then they move it down a quarter of a penny. So they're really pinning the price down here, but that just bodes well for us because we get to buy more stock at lower prices, and that unlocks the potential of when that potential of that company is unlocked, you see a totally new company. Now, some people are predicting to go up back into the 40s and 50s. They always do these things like, there's a sell wall here, or there's a gap to fill here, or whatever. If you see this, right? If you see this move, right? And let's say this goes to $40 or something like that. Even if it went to $20, let's say. At that point, you're a totally different company, guys. So, you can basically reinvent the company, which is what GameStop has to do. Right, but they don't really have a vision for what market they want to get into yet. They haven't sold their vision to their shareholders yet. Some people say it's the NFT marketplace. I hope it is. I hope NFTs take off again. I hope they can do something with NFTs that bring people into that space and make it so that everyone in the world uses NFTs, to do business from this point on. And GameStop is the leader of that industry. I am cheering for them. But I know that at $20, at $40, we do a share offering, a small share offering, we pay down some debt, and then we use whatever cash is remaining to launch that production studio. And again, now you have to reevaluate AMC as a movie theater company. You have to see it as a production studio as well. You have to see the marriage between production and movie theaters. And that's something that we haven't seen on an earnings statement yet. We haven't seen it with Sony, how it's going to boost their revenues. And it's going to be interesting to see Sony's earnings statements. That's something that we should be covering. When Sony announces, because they bought all those theaters down in Texas because they had trouble during COVID. Those Alamo theaters went bankrupt during COVID, and then they tried to make it, and they were just, again, when you have debt piled onto you and they don't have angel investors like the apes to come in and bail them out and pay off some of their debt and become partners, their only option is to keep taking on bad debt, right? And try and pray for a blockbuster that can save their business. And, something has to give so that they can get some help. But no matter what, they just keep taking on more and more debt. And eventually they had to file for bankruptcy. Sony steps in and buys those theaters. And now we will see on Sony's earnings statements from here on out what they make from the theatrical releases when they release their own movies in theaters. So when you see Across the Spider-Verse getting released, you're going to see, they make 50% of the ticket at AMC, but they make 100% of the ticket at Alamo theaters. and they make an absolute killing on that movie, right? So, that's where we're going to start seeing them separate themselves from other production studios because they own theaters. Netflix as well, when they start getting their theaters up and running, they call them whatever the hell they want to call them, but they're theaters. When Netflix gets their theaters up and running, they're going to release Netflix content into theaters, and then all of a sudden, you're going to get these Netflix theaters, and it's going to be like, oh, cool, this is a Netflix theater. You're going to watch a movie, and they're going to make 100% of the ticket at the Netflix theater, and you're going to get to see just how lucrative a business it is for a production studio to actually run a theater business. But yeah, things are going to move quick, okay? And you don't know when they're going to move, right? You don't know if it's going to be this week. You don't know if it's going to be next week. We're just bouncing off the bottom, right? We're doing this. We're just bouncing off the bottom of that 200 moving average. And it's dangerous to go over it, right? Because a lot of people see a cross of the 200 as a change in momentum in the company. It means that the stock has stabilized and that there's room to grow. If you don't stay under the 200, obviously you stopped falling, right? The law of investing is you never catch a falling knife, right? And what a falling knife is it doesn't cross the 200, and it has crossed the 200 in the past 2.5 years, but they've immediately shorted it down. And you want that stable, if this were to cross here, right? If that were to cross and like start some pattern up here, you would want the 200, to start curling up, here and start like bumping this up. That's why it's called never catch a falling knife. So, you want to use your indicators and your averages because that's what professionals use. But again, they use them for different reasons now. It used to be like, hey, we use the 200-day moving average or 500-day moving average to predict movement when it comes to like, hey, who's going to get interested in the stock? Now it's used for an algorithm. You know what I'm saying? The 200-day moving average. If you ever seen Edward Breachuk talk, he talks about the 666 moving average, and what that does and how the stocks always curl down or Bitcoin always curls down towards the 666. This is the same thing. It's an algorithmic trigger, that sends volume into the stock. And right now it's not ready. It's not ready to pass that 200-day moving average. As you can see, it's bounced off of that 200-day moving average multiple times and been rejected. So they're not ready to move it. Whether that's because they're still stealing options premiums, because people are buying a lot of lotteries contracts and options contracts. Again, I don't know, but I buy enough options, but I buy them far out. So, I'm buying for 2025, June 2025s, I'm buying for 2026. If I can get my hands on cheap ones in 2026, because my prediction, right, I'm trying to predict the price by buying options. And I'm trying to get a discount on shares in the future by buying the contract to buy them now. So, I don't think that AMC, which is bullish because I don't believe that AMC can stay down at $5 or $5.50 forever. I don't even think it could stay under $10 for very long. It just doesn't seem like a reasonable price. You have 300 million shares times, $10. That's a $3 billion company. So, I don't think AMC is a $3 billion company. I think it's going to be a super lucrative company. And again, $3 billion would be like, hey, you're going to make $3 billion over X amount of time, right? We're talking about a 20-year PE ratio. And I think that, I think we're making well over $3 billion in the next 20 years. So this is trading at astronomically, well, I would say dirt cheap prices. I would say not use astronomically high, but I would say this is trading at dirt cheap prices, and that should get you extremely excited if you've got money in your pocket. I don't know how many of you have money in your pocket. This is obviously, a rough economy. People have been talking about it. Groceries being high, housing prices being high, rent being high, gas being high, everything being, medical expenses being high, everything being overpriced, or just being a drain on their pocketbook. Well, movie tickets for the most part have stayed nice and cheap. They haven't really gotten a boost, guys. Like, under normal circumstances, if movie tickets were to take the same path as every other company, movie tickets, just the flat fee in any state would be $20 a pop to go see a movie. But they're not. They're $14. They're $17 in premium. You could probably charge $25 for a premium ticket. To go sit at a White Sox game, I think the bare minimum is like $30 or $20. They suck now, so it's probably much cheaper than that. But when they're just an average team, they're $20, $30 a ticket, right? And that's when you're paying $9 for a beer, and you're paying $7 for a popcorn. Just like the prices are super marked up at the stadium as well. So, the movies are really what's going to carry you here, though. You can talk about the banking practices and all of the new banking regulations that are coming in, but they don't actually have an effect if stocks aren't hitting the lit exchange. Gary Gensler has explained this at length, that 90% of retail traded stocks from the brokerages, payment for order flow, makes it so that anything that you might try to buy simply doesn't hit the lit exchange for the purposes of them controlling the price, right? And that's what the market maker does. They say, we think the stock should be at this price, so we control the price and move the price to the levels that we think it should be at, given the health of the company, right? And they're in their right to do so because the American people voted for payment for order flow. Now, I am 100% against payment for order flow. I think people think free and they think there's not a cost, right? And they call it best execution, but it's really worst execution for you. It's best execution for the market maker and the brokerage and the hedge fund and the rich people, but it's actually only working on their behalf. Best execution, payment for order flow are like, it's like the Patriot Act. It's like if they called it the Spy on America, American Civilians Act, nobody would vote for it. But they called it the Patriot Act, and people are like, it's patriotic, it's a good idea. Call it whatever you want. It's a shitty idea, right? Payment for order flow is front running, but it's front running from the rich onto the poor. The problem is they thought they could front run us out of this trade. They thought they could just get ahead of us and just short sell all of our shit, and we would sell it before this thing could freaking, recover. And they were wrong. The movie industry, the bet was simple for us. The movies were able to recover because we were smart enough to go and push the movies. We were smart enough to go and push the merchandise. We made $50 million in merchandise last year, and a good percentage of that was from the people in AMC going and pushing at Christmas time to go and get more memorabilia, more merchandise, get Barbie cars, get Dom's Charger, buy a Christmas toy for somebody. So when you push that merchandise, when you push that memorabilia, when you push that stuff for your company, and you move the needle $50 million, remember, that might not seem like a lot of money to you guys, but when you pay down $50 million in debt, and you start looking at your, you guys are at what? You're at like 4.3 something. I'm going to say something around that number. $50 million. You're like, oh, okay, well, it's just $50 million. Well, this number, looks a lot better than that number when it comes to debt, right? And if you do that again, it looks even better. And if you do that again, it looks even better. So, just that little chipping away at the debt, that little chipping away of that $50 million, right? Along with your other popcorn sales, and you're able to start paying down $100 million, $200 million in debt. And when this is already healthy, okay? We are in a very healthy debt situation, okay? The debt is healthy, but it can be more healthy. We can get these debt covenants removed. We can pay down the 2026 debt. We can extend that debt out, to a different date and get a lower interest rate and get a discount on our debt. But it's really not a discount for us if we have the cash in hand, right? You're not really, if you can guarantee business in the future, there's no interest. You should have no interest in paying high interest on debt, right? Like it has to be suitable for you. If we have $1.6 billion in the bank at AMC, and we owe someone $1.6 billion in 2026, we can either say, hey, listen, we're going to pay all $1.6 billion now and get rid of that. And you guys aren't going to make any interest for the next 2 years. Or you can extend this debt out 5 years and give us a lower interest rate. And we'll obviously still have to pay the $1.6 billion, but at least you're going to make a little bit of interest on the loan. So that's where renegotiating this debt becomes super important, because if we renegotiate that debt or pay off that debt, those senior notes are paid off. That gives us the opportunity to offer a dividend, but it also gives us the opportunity to free cash flow, right? When we don't have an obligation to pay down debt, we stick that money in our pocket. That money becomes profit. That profit can become, investable. We turn that into, and that's going to show up on your chart, guys. That's going to show up on your chart. And if it doesn't show up on your chart, then the market makers are fucking crazy. The brokerages are fucking crazy, because that means that they're all going bankrupt, right? Because they're going to be overselling stock to a company that's just like on a full-on sprint to success. If we pay down, we're at about $1 billion. If we get 150 million to 200 million in quarter 3 and another 300 million in quarter 4, you're at like $1.5 billion in cash, right? If you can profit 200 and 300 million, which we can do because we've paid down debt. Now they have to come and negotiate with us, or we take that money and we can invest it in a production studio, right? Now they know that's a gamble for us. They know that, hey, if they try to take out a production studio right now with this debt lingering over their head, right? They risk the chance of not getting the movie out on time and not making the payments on their debt, which is due in 2026, because they need 1.6 and they might not have it, which means they're going to have to dilute the shares, and that's good for the market makers and the hedge funds and the exchanges, because AMC only has a certain amount of shares left, which means that they can tank the stock again on news of dilution, failure to deliver. AMC fails to deliver a good movie on time before 2026. It's not making money. The company's not making enough money to pay down its debt, so it gets penalized, right? Which eats into its money, and it starts losing money rapidly. So they're betting on us not being able to pay down this debt, but we have 2 huge quarters ahead of us. So everything we've got has to go into paying down this debt. Now, I know I've said that a million times. It's not going to be like, oh my God, this is like some wisdom that we've never heard before. But the most important thing you could do is go see a movie, buy a popcorn, buy drinks, go get your merchandise at a time when the company needs you, okay? Because for the rest of your life, you don't have to do this if you do it now, right? You don't have to go and force yourself to see movies. Like, we went to see Fly Me to the Moon, and it was actually a great movie. I enjoyed it. It was funny, kind of a romantic comedy mixed with like a faking of the moon landing. Woody Harrelson was fantastic. Scarlett Johansson was fantastic. Everyone did a great job with the movie. It was funny. It was enjoyable. It didn't fail in any way. So, saw that movie yesterday. Gonna see Longlegs tomorrow. We're gonna keep pushing the movies, and we're gonna keep spending money at the movies, and we're gonna keep moving the needle on earnings, so that when we get this debt paid down, they have either one of 2 options. They either keep selling us shares at super low prices, or they spike the price up, and that's the only 2 options they have. If they keep the price low when we're making tons of money, there's no doubt in my mind that Adam will have the option of offering a dividend in the next 6 months to a year. Now, I don't think he will, but if he might not have a choice, right? Because he has to do something on behalf of his shareholders. If the stock goes to 20 or 40 or 60, if it runs like I think it can run and should run, then Adam can just raise capital off the stock. He can pay down a specific amount of debt. He can launch the production studio, and this thing is all over. We're all going to be rich because when he launches the production studio, if you don't want to get in on the production studio, you're just crazy. You own 60% of the theaters on the planet. You put one movie out for 60% of that movie. Just think if you make an Inside Out 2. If you make Inside Out 2 and you make $1.4 billion and you own 60% of the movie theaters, well, one, you make 60% of that, which is about $600 million just from your theaters. Then you split 50% of the other, 700,000 or $700 million, 50-50. So you make about, $900 million off of one movie, because you're splitting the ticket. I mean, it's an insane amount of money that you can lock in if you own all the theaters or the major theater chain, and you have a production studio. And if you're doing, you create an animation studio, which is the highest grossing films right now. Children's movies, kids' stories, family movies are absolutely killing it at the theater right now. Despicable Me is going to have momentum, and that's going to continue for the next couple of weeks. Inside Out still has tons of fucking legs. What's the other movie? Those both run into Twister, which is going to give us a little boost, right? That's going to kick us up. Long Legs is doing well. Best best independent movie in 10 years for an opening box office weekend. I think it did like $28 million. Fly Me to the Moon did okay. There's a bunch of good movies in theaters, but these are all like cushions for the company, right? It's the blockbusters that are going to deliver for us. And then, you get this momentum carrying out through August and September, and you're set, right? You're set for the rest of the quarter. And then you run into your fourth quarter. And this all comes down to paying down debt, reducing all of this stuff, being fundamentally sound. I don't care what people say about which phase or which system is coming into play. There's fucking cat systems. There's all kinds of bullshit going on. Use that shit as entertainment. Get yourself educated with that stuff. Understand how the market works so that you don't get upset when shit like this happens, right? This it makes more sense when you understand payment for order flow is happening right now. This makes more sense when you understand that the CAT system doesn't work on retail orders, because retail orders never hit the lit exchange, and the CAT system is for the lit exchange. So the CAT system was destined to fail because everything was moved off exchange anyway. Okay? They're not tracking stuff that's moved off exchange because it's never hitting the exchange. So there's no way of showing the buy and sell orders and tracking that stuff because it's just not even hitting the exchange. So again, these are useful tools if we can overturn payment for order flow, which Gary Gensler, to his credit, has been saying for 3 years now. I've been a basher of Gary, but Gary seems to be making more sense every single day to me. He talks about payment for order flow being the major problem. I believe that he understands that it's been front running. I don't believe that he's the bad guy. And I think that they know that the more Gary talks up about payment for order flow, that the more that they want to get rid of him, because they're making a killing off us, guys. This is what they're doing to every stock that retail gets into. Okay, they're front running us, and then when we get out, they get in. And then when we get in, they just short the stock to living hell, and they don't let any of our orders to the lit exchange, and they suppress the price. And then when we get mad and upset and leave and go, wow, this investment really didn't play out, because again, you're not following the fundamentals. You're not following the revenue. You're not following the buildup on the profit. You're not following anything fundamentally, and you give up, right? Well, I'm not giving up because I'm following the fundamentals. I understand the revenue. I understand the profits that are to come to me as a shareholder. They're giving me buying opportunities at this level, the best buying opportunities I'm ever going to see in the stock market in my entire lifetime. You'll never get a better purchase, in my opinion. You'll never get a better price on any stock in your life than this. There isn't one. I've never seen one in my life. Everything at least has some gradual growth, right? When there's speculation around a stock, right? Tesla has some wild spikes, but it always gradually moves up to price retail out. And that's how it ended up being a 90% owned institutional, 90% institutionally owned, because it gradually went up. And even though a lot of institutions got squeezed, they were getting majority squeezed by a little bit of retail and a lot of institutions who understood retail's enthusiasm about Elon Musk and people's enthusiasm about electric cars and how the beauty and style of Elon Musk's creation, which was the Tesla car. So you start looking at that, right? And they capitalized on the retail momentum. They capitalized on the excitement and enthusiasm. They capitalized on all these amazing things. And then they moved the price up gradually to try and price people out and shake people out with these spikes up and down, you know, these stop loss hunting. All that stuff happened in Tesla before it happened here. But here it's different. Here they continued to front run this company, but everyone wasn't as naive as they were during Tesla. Something was wrong when they turned the buy button off, and people caught on quick. People really started to understand. Yeah, they did take Sears. They took Sears. They took Toys R Us. They took a bunch of them, man, and they're trying to repackage them and sell them back to us, right? That's the best part, is that these institutions bought these companies, and now it's like if they launched Blockbuster and it was like owned by Ken Griffin, and you're like, I can't wait to go to Blockbuster again. I can't wait to go to this again. It's like, yo, dude, it's not owned by the Sears family. It's owned by some corporate douche, you know? It's owned by some banking cartel. And they're just throwing the same name on their shit now. So, yeah, I mean, I wouldn't worry too much about it, you know? I wouldn't worry too much about it. You should feel fantastic about the position you're sitting in, because all the indicators suggest that the company is a great buy. You know, all the indicators are suggesting, from technical analysis to fundamental analysis to just, you know, your PE ratios, there's not a single metric out there that you can take and say, this is a bad company. Because even if you took the debt and said AMC has a lot of debt, it still has less debt than it did during COVID. We had $4.5 plus billion of debt right before COVID in 2019. We've got 4.39, and we've never had $1 billion in cash in our bank account. We've had 300 million, we've had 500 million, and we paid a recurring dividend with that because we knew we had consistency at the movies. But we've never had $1 billion in our pocket, right? The only time we really went out and spent billions of dollars is when we purchased Carmike theaters in 2014 and 15, and we absorbed them into our portfolio and turned around and expanded our empire, right? But that's how we got $3 billion in debt and added another $1.5 billion in debt, going and renovating all these old movie theaters, new seats, new screens, IMAXs, Dolbys, surround sound systems, laser, all of this stuff, upgraded kitchens, all of these classic theaters needed to be updated. And that's where that debt came from. It didn't come from being a poorly operating business. It came from mergers and acquisitions. It came from the acquisition of Carmike Theaters, okay? It came from the acquisition of the second biggest movie theater chain. And now we're the number one, by far, largest theater chain in the world. And we're doing exceedingly well in merchandising. We're doing exceedingly well in popcorn. We're doing exceedingly well. We're doing great on chocolate sales. We have an entire catalog of food that's ready to be delivered to your seat at some of our best theaters. So all we've got to do is go and hit some movie theaters during this time period. This is it. The velocity of money means we save on interest. If we get a velocity of money, if everyone goes and spends a couple dollars this week at the freaking movie theaters, buy some popcorn and a drink, we move that debt down really fast, okay? If we get our friends and family, if we recruit our freaking neighbors, if we sign a friend up for A-list as a gift for their birthday or a Christmas gift this year, if we move the needle for our company, right? and we get people involved in our company for the rest of their lives. If they love their A-list and they go to movies and they buy their popcorn and drinks for the rest of their life, you created a lifelong customer. Okay? That's exactly what we need to do. Okay? And we're rich, guys. You're going to be on a beach sipping margaritas with your toes in the sand anytime, any place, anywhere that you want. You know? You guys think this is, made up, but this is actually how this works. I'm telling you because I've actually been through it with other stocks. You know, I might be closer to retirement than you because I've done this in other stocks. And maybe I have more stock than some people. And there's people who are already retired who have way more stock than me, or who have worked their ass off their entire life, paid off their house, paid off their car, paid off, their any loans and credit cards. And they have tens of thousands of shares or 100,000 shares, and they don't even talk about it. And they're ready to just go into that next level of money where they're like, they're financiers. They're just exploding in wealth because this is how you make those moves. These are deep value plays, right? And the Warren Buffett is most notable for coming in and saving bad businesses and turning around their debt and restructuring their freaking corporate office, and then bringing in a CEO who knows how to run shit, and then he just smooths everything over, and then 5 years later, it's a powerhouse company. But guess what? Warren Buffett is sticking all the money in his pocket. And that's what we are. We're just a bunch of people that make up one Warren Buffett. Okay, we're 3.8 million people who equal Warren Buffett's wealth. We are a whale collectively together who can save this company. But guess what? The difference between us and Warren Buffett is Warren Buffett could only eat one bag of popcorn, buy one drink, sign up for one A-list for himself. We've got 3.8 million people who can move the needle by just going and buying popcorn and drinks. So we need to be enthusiastically moving people, They hated it already. It is. It's the greatest spike. It's the greatest deep value play to ever exist. And it's fundamentally proven, man. It's fundamentally proven. You can say what you want about GameStop, but it's not a deep value play. It's a super heavy recovery play. And it's a long shot turnaround play. It has to develop a market. Okay? This is the disconnect between me and the GME people. Is you guys can't even tell me what the future of your business looks like. You're just talking about DRS, stock, deep fucking value. The investor, Roaring Kitty. But at the end of the day, Roaring Kitty is just Roaring Kitty, and he only has enough money for himself. And you don't get rich because Roaring Kitty has money invested in anything. It's nice, but guess what? The market makers stamp that shit out real quick. Oh, he's going to go live, and guess what? And he's pointing at it. He's going up. Look at it. He knows that they control the price, right? He knows. He understands it. He is very well read in the market, okay? He understands all the things. He's an investment advisor. He works for a bank. He's smart as shit, okay? We don't have to get into the qualifications of Roaring Kitty. But the reality is he spotted deep fucking value when GameStop was thought to have been going out of business, 5 years ago, guys. And since then, it's at all-time highs. And I have no doubt that it could hit much higher highs because it's a short squeeze situation. But it doesn't squeeze if it doesn't survive. And their bet is that GameStop won't survive 5 more years. In fact, their bet is that GameStop won't be able to recreate a market, that it will take the money that was given to it from you, okay? Now just play this scenario out. They're betting, the market makers, the hedge funds, and the banks are saying, in the next 3 years, Ryan Cohen will invest in something that will, and the GameStop shareholders will have a decision to make. Either they stay in GameStop for life and hang out or he has to redo the entire capital raise, right, on a spike. So he has to dilute the stock, re-raise capital, and try to capture another market with a new idea in the next 2 to 3 years after the capital raise happens on dilution. Because remember, the GameStop people were all about Adam Aron's diluting you guys. He hates you guys. He's the enemy. Ryan Cohen would never dilute. Ryan Cohen diluted you guys as many times as we got diluted. The reality is that it's a fundamentally good idea when you need to raise capital to raise capital. Adam Aron made this point. Everyone shit out of Adam Aron. Ryan Cohen did it, and everyone praised Ryan. You know, it's just called bias. It is what it is. You guys want to be biased towards your GameStop company? No problem. But the fact of the matter is that they still have to fundamentally turn around that company and grow that business. AMC does not have to do that. The company is healthy whether we go or not. It's just more healthy if we go. You know, you look at a person and you're like, you know, that person would be healthier if they had a certain diet. That's all AMC needs. It needs a steady diet of AMC moviegoers, you know, bringing it a little bit of cash, going and seeing some movies. And it's like, you know, you go from being like a certain look or style to being in great shape, right? That's the difference between being in good shape and great shape, is a couple people going to the movies and supporting the movie theaters. Now, the same thing goes for GameStop. I'm not shitting on GameStop. You guys going and buying video games there and toys there or whatever you guys buy at GameStop. I buy headsets there. I buy controllers there. You guys going and buying stuff there helps their bottom line, and it keeps them in good shape, because a company that's not making money isn't in good shape, right? But in order for it to be in great shape again, it has to refine itself. It has to go back 20 years and find a market that makes $20 billion, right? It has to spread that all across the stores, and I just don't know that they're able to do that right now. So again, you could say that we're not deep fucking value, but we are. We are the greatest investment of the 21st century. I choose to put my money into AMC movie theater stock because of the price that it's at, not because of movie theaters being, you know, anything other than super underpriced. If you were to start selling me NVIDIA at $1, I would take my money out of AMC and I would move it to NVIDIA, because gaming platforms and processors, if NVIDIA was a $50 million company, I'd be like, this is going to be $1 trillion company someday. You have to move to the best possible investment in the market if you feel that it's the best investment in the market. Why would put your, oh, well, you know what, this one's the 10th best investment. I'm going to invest in that one over there. Why would you invest in the 10th? That's like saying we've looked at the top 10 draft picks in the NFL, and we're going to take the 10th best guy. Why? Well, what if he turns out to be the best guy? But all you're evaluating, all your scouting tells you that's the best guy. Why wouldn't you take the guy that you believe is the best? Why wouldn't you pick the company that you believe is the best? Fundamentally, already turned around. You guys have already made $5 billion. You guys made $4.9 billion last year with a writer's strike, a Screen Actors Guild strike, and production delays from COVID. You're going to make $5.5 to $6 billion this year at AMC, which is exactly what we were making at the peak of the movie theater industry in 2018 and 2019 with Avengers Endgame and Avengers, whatever, Infinity War. So I don't see this thing failing. I see this thing growing exponentially. And if it runs in a production studio and starts going to streaming, you've got an entirely different business. The market cap of this thing could explode 5, 10, 15, 20 times over. The fair price value of this company is significantly higher than what it's priced at, which is why I'm buying at so low prices. Do I feel like NVIDIA should have topped out $100 ago? I mean, I traded NVIDIA. I was a big advocate of NVIDIA. I was a big advocate of AMD. I got into Tesla, and I mean, I've called a lot of great stocks when I was young, and I don't know how you can price NVIDIA at the total value of the entire European market. Like, NVIDIA is worth Europe at this point. Like, it just doesn't make any sense. The numbers don't make any sense on NVIDIA. And most of that is with contracts that are guaranteed, and you have to deliver those wafers, those semiconductors, those graphics processors to those contracts, but there's no guarantee that they can deliver. That's like the big bet with Tesla was, hey, we're going to deliver all these cars. And the big bet with Tesla was people were saying, you're never going to be able to deliver all these cars because you don't have the cobalt, you don't have the ability to make the batteries, you don't have a gigafactory up yet. So what happened was Elon worked night and day to get that freaking gigafactory up, and he threw it up real quick, and he started getting the battery supplies and started getting these things, and he started to deliver the cars, right? I don't know that NVIDIA can do that because you're already sitting on a Taiwan, invasion with China. If Biden gets any weaker, they could invade Taiwan, which is going to interrupt the semiconductor industry because Taiwan semiconductor, one of the biggest semiconductor factories in the world, is there. All those wafers, all those semiconductors are going to be upset. The supply chain gets upset. People can't deliver their product, which means they're not getting money. If you don't give me the product, I'm not paying you the money. You've got to refund me my money. That's a loss on your balance sheet. That's going to reflect on your profits. Yeah, it'll come back someday, but it's not going to be anytime soon, and it can really disrupt the semiconductor market. So I think NVIDIA is super overpriced, but that doesn't mean it can't go to $5 trillion because we just make shit up anyway in the stock market. Look at this. This is just a made-up number. There's no way that this thing's $5 a share. There's no way that we have 300 and something million shares and this is $5. There's no way this is a $1.5 billion company. We just make up numbers anyway. So it could go anywhere, man. It could go anywhere. I'm not ruling anything out. My Twitter is banned. A week before they shot President Trump, I told people how much I dislike the left because I find them to be extremely sick people. And I did not wish them well. And it got me banned from Twitter. So I got banned from Twitter for saying things like that. I still stand by my statement. I don't like those people. Anyone that is trying to ignore the conversation about how leftists are pro-pedophilia are weird, and I don't like you. Anyone who's trying to ignore the fact that they're pushing crime into cities and allowing for violence against old people and women and all that other stuff, and they're basically destroying cities. I have a problem with that, and I don't want to live in that world. So, yeah, we're not friends. I don't like you. I don't want to be neighbors with you. I just don't think you're good people. And, I knew this was coming where they were going to try and assassinate Donald Trump eventually. I think a lot of people felt that way, and thank God they didn't, because I think we'd be in a civil war. So, we might already be in a civil war. I definitely don't want to live next to a pedophile. And I definitely don't want people, my neighbors, to be like, it's okay, pedophilia is legal now, so that makes it okay, because it's not okay. So, say what you want about, Chris, that you're being such a fanatic and an extremist, and that's not how it really is. But if you look at California's laws and the things that they're saying and the laws that they're passing, and yeah, that's where that leads. So I'm totally against it, 100% against all those people. And yeah, I guess Elon doesn't want me, so, or his little leftist platform. So it's okay. It's okay. Life goes on. Don't need Twitter. Don't need it. It's better without me on it anyway. SpaceX and X Moon, yeah, it doesn't shock me one bit. They're moving to Texas. No, I'm not going to make a new Twitter, Andy. I just, you know what, man? I find it extremely negative. It's a super depressing place because you got people like Harry Sisson and suggesting that it's okay to assassinate the president and stuff like that. But when you react to what they say and say how you really feel, you get banned. So there's certain people who are protected and have free speech, and they're called influencers, and they're rich people. And they're selected, right? You know, it's obvious they're selected because when you get put in read-only mode, they take all your subscribers and they take all your followers away, but they still start suggesting you stuff from Harry and Destiny and all these leftist weirdos, and then like Gunther Eagleman. Like, it's all, there's a formula for what they want you to see on your feed, and no matter how much you subscribe to other people's stuff, you'll never see it. And every time these people talk, they just pump this shit into your face, and you're like, I don't want to see this anymore. And you just keep seeing it and seeing it. People keep retweeting it and commenting on it, and it just keeps showing up in your feed because these people have 2 million followers for no apparent reason, and they don't even make any sense, right? They're just ignorant little boys, you know, who haven't hit puberty, and like, I don't know, they have like this they're mentally ill, obviously, right? They're mentally ill people. Like, Harry's mentally ill, Destiny's clearly mentally ill. But yeah, I mean, like, they're just not mentally ill enough, or they don't have the courage enough to actually be violent. You know, like, they're harmless mentally ill people, but they're still mentally ill, like most people on the left are. And you can ask therapists about that. 90% of people who go to therapy, if it isn't for PTSD from military service, it's usually just a leftist with some weird psychotic problems. 90% of the people that sit in a psychiatrist's office are left-leaning people, meaning that, you know, we've created mental problems in the country by perpetuating these lies onto the public. Anyways, I don't want to get into it. The AMC spaces were toxic. They're still toxic. I'm toxic. I don't give a fuck. I'm toxic. I'm bad. I'm mean. I don't like certain people. It's okay. You know what I'm saying? To each their own. If you don't like people, don't follow them. Don't go out there and try to be liked. Don't go out there and try to get likes or followers or whatever it is, or, you know, be the most popular person or get the most reviews. Because at the end of the day, it comes off disingenuine anyway, and no one likes disingenuine people. It's all fake. You know, no one likes you for being like politically correct online. It's just dorky, you know. And they've asked us, you got to be politically correct on Twitter. It's like, but this guy can wish death on the president. This guy can say, Destiny can say, I'm glad you died in the audience if you were at a Trump rally, and call them retards. It's like, okay, so you can wish death on Trump supporters who are there supporting the president, and you can wish death on the president or the former president or the soon-to-be president, but you won't get banned from Twitter because you're Destiny or Chris or Harry or whatever these fucking dorky leftist douchebags are. So, you know, they just get a free pass for wishing death on people, and they're still there. They're all still there holding their same sentiment. So again, I don't need that platform. I don't want that platform. I don't want to be affiliated with those people. I think they make me completely a significantly more negative person. But anyways, back to AMC. This is the most important thing, is that you look at the stock right now. You know, this point, these two things are pinching together, this 50 and this 200-day moving average. It's nothing I haven't seen before. I don't know how it hasn't crossed yet. I mean, the spread, if you look at the bid-ask spread on the daily, it's absolutely crazy. Yeah, nobody's doing nobody's doing spaces anymore because there's no content, man. I mean, so Andy, let's be realistic here, man. People hold spaces. I used to hold spaces for 6 or 7 hours a day, okay? And a lot of the things that I say in spaces come up in other spaces, okay? And it's not like I'm the guru of the stock market, but the reality is that if you talk about things of substance that actually matter, and then you get some proof, hey, this guy knows what he's talking about. Let's talk more about what is happening here, because there seems to be something positive to talk about, right? This guy said, hey, the debt to income ratio is going to flip, and that's going to be a super positive catalyst. Well, we made $4.9 billion last year, and we're at $4.4 billion or just a bit lower than $4.4 billion in debt, right? The debt to income ratio has changed. Now we need a profit so that we can continue to show that debt and income are going to continue to separate, right? So that they need to separate more and more over time, okay? And when you talk about these things 3 years ago, 4 years ago, people say, it's just about buying and holding. You want to buy more shares. We need the volume. We need the volume. We need the volume. Oh my God, we need the volume. We need gamma. We need gamma. We need to buy more options. And it's like, yo, dude, like, you want to be supportive of everyone's ideas, but at some point you have to just be like, yo, dude, these people are all full of fucking shit. And it's the best thing in the world is just let them keep talking, because the more they talk, the more you realize they don't know what the fuck they're talking about, man. These guys have been going on for 3.5 years, and they still just regurgitate some YouTuber just said what some other YouTuber said, which some other YouTuber said, which some other YouTuber said. They're all talking about the same content in some form, you know. And there's a lot of great YouTuber content. Don't get me wrong. There's a lot of times people will catch something someone says in the news and be like, let's talk about what Ken Griffin said to Congress. Let's talk about what Gary Gensler said in this meeting. Let's talk about Hester Pierce and what she said. Let's talk about this senator and what they said. There's a lot of great content from these people. There's a lot of great stuff in the market. But at the end of the day, all those rules and regulations, all those things that they're talking about, all that market structure that they're talking about, it ain't going to make this company bankrupt, and it isn't going to make it successful either. And that's what they've failed to recognize, because the biggest influencers in this community, from the start to the end, have never ever shown. The biggest influencers have never shown you that they go to movie theaters. You know, they never post a ticket. They won't post merch. Do you guys think I need this shit? Do you guys think that, like, I cuddle with this fucking thing at night? I do this because when I buy one, I know other people look at us in the theater and go, oh, that's cool. I'm sure they're going to gift that to some kid. They're going to gift that to a neighbor. They're going to gift that to their niece, their nephew. Someone's going to get a little gift. And it's like, when we find people to give them to, we just give them away. You know, we gave the Barbie car away last Christmas, right? We gave the, Dom's Charger away. We got Ghostbusters stuff. We got all kinds of stuff. Ghostbusters traps. You just buy it because it's yours, right? And you promote your products, and everyone that sees you buying it, suddenly if you buy one and you go up to the register with one, people look at it and go, you know what? It's just an extra $1. It's just an extra $2 for the thing. And they put it on the register, and everyone starts to buy what you buy, right? You trigger like a competition. Like, hey, if they're getting a Dune popcorn bucket, I've got to get a Dune popcorn bucket type of scenario. So the most important thing has always been supporting the fundamentals, but the biggest YouTubers have never ever shown that they go and actually watch movies. They've never actually shown that they buy merchandise. They've never shown that they're A-listed. They've never ever shown you anything that they do to help their company succeed. The only thing they do is talk about market structure, okay? And market structure applies to every stock in the market. Technically, you could apply their logic to any stock, and that company will not succeed or fail based on that new market structure. In fact, there's no correlation between success and failure because of market structure. It's not like, oh my God, AMC is going to make us $7 billion next year because market structure. It's like, it isn't. It all depends on movies. Now, you could dilute shares at a certain price based on market structure. Retail could sell at a certain price because of market structure, because the rules change, because, payment for order flow goes away or something like that. But that hasn't happened. And until you get people in Congress, until you get those YouTubers to run for Congress or run for Senate and make a difference, they're just fucking getting followers to follow along, and it's on to the next thing. It's from this to that, and that to that, and that to that. And there's always some new exciting event 3 months from now that you can't wait to have, some new rules, some new market structure, and it's useless. It's useless information at the end of the day because it doesn't change good companies to bad companies and it doesn't change bad companies to good companies. It just allows for different rules to take place in the market, which could end up affecting capital raises. But that's about it. It doesn't make you a better company just because you can raise capital. It's all about execution. That comes down to your CEO, that comes down to your board members. That comes down to your company structure. That comes down to, hey, you could have Boeing's CEO and be like, hey, we killed 2 of our employees because they were ratting on us, and we hired a bunch of DEI hires, and our planes are crashing. But it's still a great company. It's not. No matter how much money you raise, Boeing is a shitty company because their planes are crashing, their fucking engines are failing, they're hiring DEI people who don't know how to do their job just for the sake of telling them, hey, you're going to get this job because you're a different color or a different skin tone or a different freaking gender, or you identify as something, and we're going to stick you in a position of importance. And you know what? You're not really qualified, and you don't really care, but you took the test, and now you're there. So that doesn't make you a great CEO. Okay? It doesn't mean you're going to execute a game plan. It doesn't mean that you're qualified to call yourself a good company. It doesn't mean that there's growth baked into your company. It doesn't mean anything. You need execution. When you have money, when you have GameStop money, when you have $3-4 billion in cash, you need to use that cash to turn it into something that makes you $2-3 billion a year. And we'll see if they can do it. I know that if I gave Adam Aaron $2 or $3 billion and erased that debt, we'd be making at least $2 billion a year in the movie theater business. Maybe even just off production. Maybe even just off production. We might make $3-4 billion a year. And then you take that and you put that towards your PE ratio and you're at, whatever amount. So, again, this is where the company is going, but it's not there yet. And market structure could help, but so can go into the movie theaters. So can go into buying popcorn and drinks. I like the idea of popcorn flavors. I don't know if you guys have tried the ranch dressing. Babe, you like the ranch dressing on the popcorn, right? Mm-hmm. Ranch dressing's amazing. The ranch dressing is absolutely amazing on the popcorn. Well, thank you, Jeremiah. You know what? We are throttled, but that's the whole thing, man. Is that you can feel it in your heart, and it hurts when they throttle the stock down and they try to suppress the price and they bash. Dude, it hurts because it's personal to you. Dude, that's like someone coming down to your house and you put $100,000 into your property, right? You paint your shutters. You get a brand new door, you throw some new landscaping in, you got all this new brickwork, and someone walks by and goes, this house looks like shit. Oh, that's your house? I wouldn't live there. And you're like, oh my God, like I fixed this place up and people don't like it. And then you're like, 6 months later, you put a little bit more work in, you ask questions like, what would I need to do to make this look better? And you follow people's suggestions and everything that they ask for, you give them, and they come back 6 months later and they go, oh my God, it's worse than it was before. What a piece of shit. Your house is ugly. I wouldn't buy this for this amount of money. And now you're like, I'm on hard times. I need to sell my house. And I thought this was this great house, but now I'm going to sell it for half price because these people think it's a shitty house. And then you're like, wait a minute. The guy that's buying the house for half price is the guy that's telling me it's a piece of shit. If it's such a piece of shit, why are you trying to buy the fucking house? That's the screwball, right? That's the screwball that they keep throwing at us, is they keep telling us it's a crappy business, but they wouldn't not own it, Vanguard owns this. It has shares. Why do you own a company that you think is going bankrupt? Why do all of these companies that say, oh, well, Susquehanna wrote a downgrade on AMC. Why was it buying at $50 and $60 a share last year? What were they thinking? All of these hedge funds bought 1 million shares, 2 million shares at 50, 60 bucks last year. What did they do with the shares? Oh, they were doing that to lend the shares out, Chris, because they had such high borrow fees. Who are they lending them to? Who are they making money off of? Why are they buying AMC shares? If all these hedge funds, if all these market makers, if all of these freaking family offices are bashing AMC, then why are they buying it? Why are there 13 Fs with so many institutions buying it? If all of them have come to the realization that this is a bad company, it's not going to be profitable, why do they all own some shares? You keep downgrading it, yet you own it. Wouldn't you have sold it, then downgraded it? And said, we're going to buy back in at lower prices? Nope, they held just like we did. There's more to it. And they know it, and we know it, and all this is a shakedown. But guess what? This has to end at some point, because the capital's coming in. The profits are coming in. The left eye does not work, Tennis Joe. I am blind in my left eye. Yeah, NVIDIA insiders are dumping, but their friends, the market makers and the hedge funds, they're keeping the price up, and they have to. Remember, Elon Musk, Jeff Bezos, all these guys were dumping shares 6 months, a year ago. Tim Cook from Apple, they all were dumping shares a year ago. They expected a crash a year ago, guys. They expected a crash a year ago. They sold a ton of shares, but the crash never came because we never left. Remember, the money has to change hands from one thing to the next. They've got the money to buy this at the bottom, but guess what? We're not selling to them at the bottom, and we have no interest in their companies at the top. I don't want to buy NVIDIA at $1,500. I don't want to buy AMD at $350. I don't want to buy Tesla at all-time highs. I don't want to buy Apple at all-time highs. I don't want your shit. It's got very minimal room to grow. It's already exploded. I don't mind enjoying your products. I got an Apple phone. I'm talking to you guys on an Apple phone right now. I don't mind using your products, but I'm not investing in your future. I just don't see it. I don't see it having the growth potential that AMC has. Apple makes some great films. I watched Fly Me to the Moon yesterday. That's an Apple film. What'd you think?
I thought it was great.
Yeah, it was great. So Apple's making great films, guys. I won't lie to you. Apple's doing a tremendous job with films. Is doing a tremendous job with TV. Amazon's doing a great job with films. Both of them are rolling out $1 billion a year in movies. So, I mean, yeah, would I invest in them if they were just a production studio? Absolutely. But they're not. Their market cap is so large that their production studio is such a small and insignificant number on their balance sheet. It's not worth it for me to invest in as far as a growth prospect. Again, this is the greatest opportunity of the 21st century. You've got a $1.5 billion business with $4.4 billion in debt, about to do $6 billion a year in business for the rest of eternity. Okay? As long as civilized life exists, movie theaters will exist along with it in some form or fashion. Doesn't mean that we're not going to get Oculuses or, 3D headsets or, what's the augmented reality in theaters or 3D realities, some crazy shit technology that you can go see in theaters, but theaters will always exist. Movie theaters will always exist. The creation of film and telling stories on film will always exist, and you get to own that for the rest of eternity. The biggest movie theater in the history of the biggest movie theater company in the history of movie theaters. You get to own that. Your family gets to own a piece of that for the next 100 years if you want. Forever if you guys want. Until a nuclear holocaust or a comet hits the earth. You guys get to own every single person, a little piece of profit from every single movie star, every great director, every single story writer, every single great director that steps out and creates a film. You guys have a little piece of that forever. You guys get a little piece of that forever. And those movies will never stop coming. Those stories will never stop being told. It's the greatest investment of the 21st century, and I stand on that. On that. For this price, it is the greatest investment of the 21st century. And I'm not going anywhere. You guys, yeah, Netflix definitely wants to do their own theaters. Weekend at the theater is a nice break from drab reality. It absolutely is, man. It breaks you from the monotonous lifestyle, right? And it's honestly super healthy. It's very therapeutic. So, you guys have a great day, man. Keep going to the movies. Keep padding the revenue. Keep helping pay down the debt. Keep showing people the way. Keep pushing your supporters. Keep pushing people in the community to go and see movies. Because the more people that go and see movies, the better off we're going to be. You guys have a great day. I'll catch you next time.